Imagine if your bank suddenly said, "Hey, we do not trust you with our best credit card anymore." Now imagine that happening to the United States of America. Yes, the United States just lost its last perfect AAA credit rating. What does that really mean? Is the world's most powerful economy in trouble? And how could this affect you, even if you live halfway across the globe? Watch till the end because this is not your usual news bite. This is a deep dive data-driven, simplified, and with razor-sharp logic. You will not find this kind of clear, well-researched explanation anywhere else on YouTube. So let us decode what just happened. Moody is the last major credit agency that trusted the United States with a perfect AAA rating, has downgraded it. The other two big players, Standard & Poor's and Fitch, already made this move earlier. Standard & Poor's cut it back in 2011. Fitch followed in 2023. Now with Moody's joining in, for the first time in modern history, the United States has 0 AAA ratings. Why? One reason, debt. And not just any debt, $36 trillion of it. That is like stacking $100 bills to the moon and halfway back. Let us simplify this. Think of the United States government like a household with a giant credit card. They are borrowing to run the country military, infrastructure, healthcare, social programs, you name it. But here is the catch, that borrowing is not slowing down. In fact, they plan to spend even more. Congress is currently working on a massive tax and spend bill that could add trillions more. And here is the shocker. The United States has to borrow $9 trillion this year alone just to stay afloat. That is like earning 50,000 Indian rupees a month, but needing a 1 crore rupee loan to survive the year. By the way, if you want to understand how government debt actually works, how it gets funded, and whether it is really a crisis or just noise, check out my earlier video. I have explained the entire debt game with clear logic and storytelling. The link is in the description. Moving back to our topic. Here is where things get really interesting. You would expect markets to panic, right? But after Moody's downgrade, United States Treasury yields moved barely. The 10-year yield moved just 5 basis points. Why? Because people still see the United States as the safest place in a storm, even if the ship is leaking. And foreigners? They are still buying. In March, foreign ownership of United States Treasuries actually hit a record of $7.5 trillion. Japan is back at number 1. The United Kingdom surprisingly overtook China for second place. But do not be fooled. These numbers are lagging. What matters is the trend, and if geopolitical tensions rise, especially with China, that foreign demand could weaken. If big foreign buyers like China or Japan stop lending to the United States, the government will have 2 choices. Option 1, raise interest rates to attract new buyers. Ouch for the economy. Option 2, print more dollars, which leads to inflation and a weaker dollar. This is what Dalio, a legendary investor, calls the debt spiral. At some point, you borrow to pay old debt, then borrow more to cover that, and so on. Creditors begin to doubt if you will ever pay back, and then things snap. What is even more wild? Crypto markets reacted immediately. Bitcoin spiked because many now see it as a hedge against dollar debasement. The theory? If the United States prints more money to cover debt, Bitcoin becomes more valuable. Simple supply versus trust economics. And then politics joined the party. Former President Trump slammed the Federal Reserve chair, calling him too late Powell, and is surrounding himself with crypto supporters. So now, debt is not just an economic issue. It is becoming a political weapon and a crypto catalyst. The United States is not going bankrupt tomorrow, but the cracks are visible, and smart investors are watching closely. Whether you invest in stocks, crypto, or just want to protect your savings understanding, this debt puzzle is your superpower. If you found this useful, like, share, and subscribe to our channel, because here we decode finance with clarity, logic, and simplicity. And remember, truth is always in the numbers. What topic do you want us to explore next? Drop your suggestions in the comments. We read every single one. Until next time, keep questioning, keep learning, and keep building your financial wisdom.